We're analyzing another big stock today, guys. You're going to want to check this out. It's a very highly requested stock in our community, so we decided to do it to make everybody in our community really happy because they deserve it. In this video, we're going to go over some news on this company. We're going to do, of course, our 8 pillars, analyst estimates, bull and bear cases from our community members. They're sitting there and they're giving their opinions on the bull and bear cases for each company that requests. And of course, we're going to finish it off with Stock Analyzer tool. What price to pay for this company? All right, so let's take a look at Qualcomm. That is the company, QCOM. Qualcomm, $110 a share. Guys, look at this. 52-week high back in January 5th of 2022 of $194. It is currently at 110, and just less than 5 months ago, about 4.5 months ago, it was at 101. So in that time period, it literally dropped almost 50%. The reason I bring that up is we've done so many videos on big companies. And when we say, oh, this company needs to drop 30%, people will literally say, what, Mo?
That's never going to happen.
That's never going to happen. Invariably, what always happens?
Always happens.
It always happens. Guys, stocks have a lot of volatility to them. And what we're trying to teach here is a process to be patient and to understand the difference between price and value. If you understand those differences, you can just be patient, use the watch list in our tools, add the companies to your watch list, and wait for the price to get there. Now, as time goes on, the fundamentals of the business will get better, and you should pay more money for them. But be patient, you'll find the stocks to buy at the right price. Qualcomm is a $123 billion market cap, which means if you bought every share outstanding on the market, $123 billion. The 5-year average net income, $7.4 billion. Last year, they made $8.6. Here's the first thing I don't like about the company. Mo?
Less cash flow than income.
And not just a little less.
It's significant.
Yeah, it's the 25 or 30% less free cash flow than their reported net income. Now, that could be because they invest a lot in their capital expenditures for the future, and that's why it's affecting their free cash flow. So there could be a logical explanation to it, but that's why you need to do a little bit deeper look into that to understand that. Because off the dribble, that makes you feel a little go, okay, what's going on here? All right, now the good news is their price to free cash flow ratios are not very high. They're still under 20. So I'm very happy about that. All right, dividend yield. Look at that. 2.8%, Mo.
It's pretty high.
Yeah, it is pretty high. I'm surprised by this. Eats up $3.5 billion of their free cash flow, which is a big chunk of their free cash flow.
Typically, tech companies like this don't do that.
It's very, very typical. You're right. It's very, very confusing there. I'm perplexed by that too. Usually, and the reason being, tech companies can really grow their revenue and profit very quickly by reinvesting.
Yeah.
So why pay a dividend?
Right.
If you can get a 32% return, the ROIC, 32% return on the money you invest in the business,
What are you doing?
why are you paying out to shareholders unless you have no other use for the money?
Right.
No other use. And I'll be honest with you, I kind of look at this saying, I mean, I wouldn't be surprised they bought back shares. Why pay a dividend? Buy back some shares.
Yeah.
All right.
Yeah.
Good margins here. 56% gross profit, which is different than net margin. Gross profit is for every extra dollar they sell, how much they add to the before tax earnings. And then profit margin is their after tax earnings. Okay? So profit margin is net of all taxes and overhead. Gross margin is before all those things. All right? So far, pretty interesting stuff. Let's check out the 8 pillars here. Oh my God. No wonder it's a big community company.
Whoa.
I was not expecting this.
Me either.
8 pillars, guys. Now, remember, the 8 pillars, just because they have 8 pillars does not mean you go out and buy them. Don't go hitting that buy button. It's still important to understand. We use our 8 pillars as a way of telling us a story. What do we need to go look into? The good news is, oh wow, they are buying back shares. Look at this, Mo.
Yeah, they are.
25% of their shares they bought back in the last 5 years.
Yep.
That's a big number.
Yep.
Guys, share repurchases are wonderful if they make them at good prices, low prices. If they're buying back shares at low prices, if you own the shares, you are getting a bigger and bigger piece of the company as they buy back more shares from the market. Let me give you the math. If a company has 10 shares outstanding and you own one, you own 10% of the business. If they buy back 2 shares, you still own one, but now there's only 8 shares outstanding that you're splitting revenue and profit and everything with. You now own 12.5% of the business. That's a huge, huge increase for you. You've increased your share of the company by 25% in that situation just by being patient.
Yeah, by doing nothing.
Doing nothing. Now, obviously, we don't want them overpaying for shares.
Right.
But this doesn't seem like it's nosebleed value. I mean, Mo, right? I mean, we're not talking about, it's not, I mean, we see companies who have like 150 times earnings and they're buying back shares. And they're like, what are you doing?
Yeah, it looks like they significantly started buying back shares in 2020.
Oh, really?
Yeah.
So, Mo, what you got in terms of some news stories? What are some major news stories for Qualcomm?
So Qualcomm announces an agreement with Apple for chip supply. So let's see to supply Snapdragon 5G. All right. So they're going to have them in their smartphones in 2024, 25, and 26. There were talks that Apple was going to do that themselves. So I'm sure that the Qualcomm investors are quite happy that it stayed with Qualcomm.
And Apple being the company you buy all your devices from, right? Not any fruit company?
Yeah. iPhones, iPads, not Apple's.
What was it? What was the movie? Was it Forrest Gump? Well, in Forrest Gump, Forrest buys himself and Bubba's mother Apple shares, and he never has to worry about money ever again. This was This was made in '94,
Yeah.
so I'm sure at some point. But it was something like we bought some fruit company or something like that. I think that was said in the movie.
Oh, that's pretty funny.
Yeah, I don't remember what it was, but it was something along those lines. But then, I mean, before this movie, what was Forrest Gump? 1994, 1995, and then later in the decade they got close to bankruptcy, and Steve Jobs came in and saved them off.
Saved the day.
Saved the day.
Yeah.
All right, what else you got?
Leading semiconductor industry players joined forces to accelerate RISC-V. Now let's see what this is. Nordic Semiconductor. Come to just
Globally, by advancing the adoption of RISC-V.
Oh, Bosch, NXP. Oh, wow. Wow.
Nordic Semiconductor.
So I don't know if this
Encourages innovation, allowing any company to develop cutting-edge, customized hardware based on an open-source instruction set.
I hope people talk about this in our bull and bear cases in our community because it's not, I mean, this is interesting. I don't know if it's good partnership, but we'll find out over time.
All right, let's get to, before we go to our community bull and bear cases, let's go to analyst estimates. Okay. Expecting to make 847 for the year ending September this past month, growing to 1334.
Pretty solid.
Double digit every year. That's great, except for, well, annualized. And then revenue growth, all right, mid-high single digits. But look at this. A drop in revenue for the year. I mean, guys, semiconductors got a huge leap. Mo, you want to pull up? Yeah, look at so look at that. They peaked at $42 billion in the year ending June 2022. And this year, the same year, ending June 2023, $38.6 billion. And expected this year to do 36.4. We talk about this all the time. When you see a certain industry skyrocket, make sure you understand, is it a temporary or is it a permanent thing?
Yeah.
We saw it with shipping. We saw it with cars. We saw a lot of these things happen. So just remember that when you're looking at companies. That's what we're trying to teach here. We're trying to teach you a way of understanding the questions to ask when you're looking at a company. So let's go in our community, Mo. Let's check out Qualcomm, bull and bear cases.
All right. This is from Cole, bull case. Qualcomm is one of the leading companies in foundational technologies and products used in wireless manufacturing.
And I imagine that's going to be a very popular thing going forward even more.
Yep. They are big in the 5G market, as we just saw with the Apple partnership. Qualcomm has tried to divert. What's that? Go ahead.
Look at that, right there. Read it. They're trying to diversify its revenue sources beyond smartphones by expanding in automotive, I don't even know what that is, and other markets. Qualcomm's Snapdragon platform is widely used by smartphones. Do you know that one?
Yeah, that's the Apple one.
Oh, got it.
Snapdragon is big for 5G.
Okay.
Let's see. Has a strategic venture in China that commits up to $150 million to invest in Chinese startups in mobile and wireless technologies.
Smart.
Yeah, it is smart. Which could also be a bear case considering the risk in China. That's a good point, Cole. All right. Apple accounted for 11% of Qualcomm's 2022 revenue. Qualcomm expects to lose Apple as a top customer by 2025. I don't think.
While you look that up, I'm going to say Qualcomm faces a lawsuit from the FTC over its licensing practices. It also faces regulatory challenges in China, such as a record fine of $975 million in 2015 for violating local anti-monopoly laws. 2022, China, including Hong Kong, contributed 50% of Qualcomm's $42.2 billion in revenue. Wow. Okay. And then stiffer competition. What else you got, Mo?
So they're not going to lose them by a top customer top customer by 2025. The partnership is through 2026 for that.
Gotcha.
Snapdragon. So we'll see. All right.
Oh yeah, right here. And even Dalton says that right here. Renewed partnership with Apple to provide 20%. Okay. Owns 140,000 patents across 18. Jeez, oh Pete. Wow. I know Samsung. Cellular Internet of Things is expected to grow to 14.26 billion in market cap, or a 23.2% compounded annual growth rate. I know temporarily the 66% of revenue comes from China is a bear, but guys, do we really think China's going to be a dud?
No.
Maybe it could. It's the fastest growing middle class in the world. I think China and India are going to have a lot of, they're growing. If you look at the number of millionaires and even number of billionaires in the world, the massive growth is coming in China. And when people like money and like growth in that regard, the government tends to follow.
They have a partnership with BMW and Mercedes to supply infotainment chips.
Oh, wow, really?
Yeah, that's cool.
Oh, good. All right, so there's some bull and bear cases for Qualcomm. Nothing that stuck out at me as something to go, oh my gosh, but let's go to our stock analyzer tool. Now, guys, this is the tool we're going to use that's been used over 2 million times by our active community members to analyze the company, make assumptions about the future, and decide what price to pay for it. Now, you hear me talk about these tools a lot and the community a lot, and there's a reason for that. It's incredible, but I'm not asking you to make a decision yes or no today. What I'm asking you to do is to make an informed decision. And you cannot possibly make an informed decision from the outside. I need you on the inside. I need you in the tools. I need you in the community test driving this thing out. Just like if you wanted to buy a car, you'd go test drive the car for 15 or 20 minutes. But the difference here is we're giving you 7 days of full free test drive access to our entire software, nothing off limits. Community, all the tools, everything you see here. So guys, make an informed decision. I'm very confident that at somewhere along the line in 7 days, you're going to realize how valuable it is and you're going to pull the trigger. And if you don't, fine by me. I'm not going to be offended, but I'm sure you'll be back at some point. Keep watching our videos. They're going to be great. So go to everythingmoney.com right now to sign up for your free 7-day trial. All right. When was the last time you did Qualcomm, Mo?
December of 2022.
Let me pull mine up. Mine was June of 2023.
And I changed every single number.
Okay. Right now, you mean?
Yeah.
All right. So I had 2, 5, and 8. So first off, for my revenue growth, I had 2, 5, and 8%.
Okay.
What'd you have?
I put in 3, 6, and 9.
Okay. I agree with that more. I'm going to go 3, 6, and 9. Profit margin. I put 18, 21, and 24.
I did 19, 22, and 25.
19, 22. I like that.
Yep.
Same with free cash flow.
I actually went, why did I go? Yeah, you know what? Let's make the free cash flow the same.
Yeah, I don't know why you went lower.
I don't know. It was previously lower. I don't know why.
Okay.
I like it. 19, 22, and 25.
Now, PE. What'd you put?
So I put 15, 17, and 19.
I actually agree with that. Now, usually, guys, what we do is we start at 15 and we go up for a high return on invested capital, high moat, high growth rate, and down for the opposite. I do think Qualcomm is going to be here to stay, and they're going to be a big player for a while. So I'm okay putting a 15 at the PE and the price of free cash flow at the end of 10 years.
Right.
So I'm keeping both those the same. Now here, the desired annual return, that's where I'm going to get a little more strict.
Okay.
Because of the fears of China, because there are still some unknowns that have to be worked out. And there's going to be volatility. So I did put desired annual return. I put 11.5, 13.5, and 15.5. Yeah. You can get 9 or 10% from investing in a long-term ETF. So in order to justify buying a stock, you put a margin of safety in there. The higher your desired return, the lower the stock price, and therefore the greater the margin of safety. And as you make higher assumptions, less likely to occur. So you put a higher margin of safety by putting a higher desired return. Mo, what'd you put in?
I did 12, 14, and 16%.
Okay. So not quite what I did, a little bit higher. I'm hitting the analyze button. Now, guys, I want you guys to stick with me for just 1 minute longer so I can explain these numbers because it's important for me to teach you how to fish, not just hand you fish. So, boom. I have a low price of 85, high price of 150, a middle price of 113. Guys, I'm changing this watch list. I'm changing it from 80 to something else. I'm going to put on my watch list. Yeah, I could even justify starting a position today.
I think I'm going to start selling puts on it sooner than later, just because of where we're at. And
yeah.
I mean, I have 81 on the low, 145 on the high, and 110 in the middle, and it was on my watch list at 99.
All right, so I've changed it to my watch list for 110. So I'm probably going to sell puts just like Mo and start selling puts at lower prices so I can get paid to wait for the stock to hit the price. Guys, if you want to learn more about that, don't forget our free trial, 7 days, full free, everythingmoney.com. Check it out.